All right. Thank you. Thank you. Welcome, everybody. As the presenter said, my name is Sean McLaughlin. People commonly know me as Chicago Sean on Twitter. I don't know why that keeps flipping over. Hopefully, we can stop that. Um, Here's my email address, Sean at trade-ideas.com. Feel free to send me emails after this presentation if you feel so moved. And I'm also always available to interact on Twitter or StockTwits. My handle is at Chicago Sean, and I don't bite. So please feel free to reach out to me at any time. So the presentation that we're going to get into here is we're going to dig into um, some hard truths about my trading past. Have been a trader, and I should probably set you up a little background about me. I started trading in 1998. I was an equities trader, trading stocks, primarily NASDAQ stocks, at the beginning and through the final thrust of the internet.com bubble of the late 90s. It was very much a trial by fire. I was in a room with 40 other completely newbie traders, all of us in our 20s at the time, very young. None of us had any trading background or Wall Street background, but we all had a fire, we all had a passion to learn how to trade, which was both good and bad. It was good because we were all in it together. We all shared what was working and shared what wasn't working, and we all learned from each other in that way. But it was bad because, hey, none of us knew what we were doing, right? And I fondly look back at that time, but I say it with a caveat. I say, look, I've been trading for 21 years now, but I've spent the last 16 or 17 years of my career unlearning all the bad habits I learned in my first 4 years as trading. At trading. So it's a journey, and we're on this journey together. And if you're here on this call and you're listening, you're in the journey. We're all in it together. A little bit about me. After starting out trading stocks for 4 or 5 years, I then moved into trading futures around 2002-ish. Eventually moved to Chicago and joined the Chicago Board of Trade, became a member of the Chicago Board of Trade, and I was managing a small hedge fund trading futures, doing trend following strategies in futures. I did that for a few years. Unfortunately, had to wind the fund down, and not due to lack of unperformance. The performance was actually wonderful, but I just really it was a small fund. I had one large investor and several small investors, and unfortunately, things changed for the large investor, and he needed his money back. And without his money, I was out of business. But I'll share that sad story with you another day. But anyway, so from there, somewhere around 2006, I really started getting into options. I traded, and I've started experimenting with options and spreads and different strategies, and that's a project or a journey that continues to this day. I still very actively trade options, but I also trade stocks too, and we'll kind of talk a little bit about that here in this presentation. So that's a little bit about me, and I guess maybe a little housekeeping. There is a questions panel here on this. On the GoToMeeting panel. So if you have any questions and you want to type them in, I think I'll be able to see them, and hopefully we'll be able to address them as needed. Okay, stop flipping over. Jeez. Okay, let's do this. So let's dig into this presentation. Again, I'm going to talk to you from my point of view. I'm going to talk to you about struggles I've had as a trader, about things that I've done wrong. And I want to let you know that I haven't done anything wrong that anybody else hasn't done, right? I'm no different than anybody else. Yeah, I'm still here. It's 21 years I've been in this game, but that doesn't make me any different than anybody else, whether you're completely new to trading or if you've been at this game for 30 years. We have way much more in common than we have differences. And we're going to talk about the reason traders fail, and more specifically, why I have failed in the past. Okay, now I'm not going to break any ground here with any new earth-shattering concepts you haven't heard before, but it's important to review these and talk about some real-world examples to set the stage for what we're trying to do here with trade ideas. So There's no particular order here, and no one reason is any more important than the other, but let's just dig into them. Reasons why traders fail. Position sizing. It is very common, and I am absolutely guilty of this, especially when I was new at trading, to tend to trade larger than we should trade. Okay? Because when you're a new trader, or you're a struggling trader, or you're a trader who needs to make some money, for whatever reason, you tend to look at trade opportunities from a position of how much can I make? What size do I need to be so I can make X amount of dollars? And that might sound good on some level, but you're completely missing the other side of the equation is how much can I lose if I'm wrong? We tend to, when we're new to this game and we're eager and we want to make money, all we tend to think about is how much money can we make and how big do I need to trade to get there? And that's our focus. That was my focus when I started. I started with a $50,000 trading account, and I was told you just trade in 100 share lots, 100 share lots. But man, I just wanted to get to trading 1,000 share lots and 2,000 share lots and 5,000 share lots. I wanted to get there so fast. And all I did was every time I stepped up my size, I would take a huge hit and back to square one. As that process repeated itself over and over again. Very frustrating. So position sizing is one of the reasons traders fail. This is an obvious one, but big losses. Big losses take people out of the game. And a big loss can manifest in a couple of ways. One, it could be just one trade that either you sized your position wrong, or you didn't honor your stop, or an overnight gap that you didn't have an opportunity to trade around just completely decimates your trading account. That's one way. Another way big losses happen is you have a strategy and it takes small losses, but the strategy isn't working, but you still continue to grind away thinking that you've got an edge. It just needs time to play out, and you just lose after loss after loss after loss. And then by the time you figure out that, oh man, this doesn't work, it's too late. You've already taken a big loss. You're already out of the game. Small wins. Now this is a personal story that I'll share with you. A perfect example where a small win is a terrible, terrible thing. So we've all heard about, let your winners run and cut your losers short, right? We've all heard that, or at least you should have heard that. There's also a school of thought that says, well, I want to have a high win rate. I want to win on 60% of my trades or 80% of my trades. And usually the best way to achieve a high percentage win rate is to have a lot of small wins. Well, the problem with small wins is that you are highly dependent on a very high success rate. And that's hard. It's not impossible, but it's hard. And it only takes one accident or one mistake or one black swan event or something out of your control. It only takes one of those to turn into a big loss, like we talked about before, and wipe out, who knows, weeks, months, quarters worth of small gains. It's a tough game to be in a game where you're trying to go after small wins. It can be done, and people are doing it, but it's very, very hard. And I said, people looking for small wins, they're usually trying to get, they're going for a high win rate. But I'll tell you, some of the most successful traders in our business, some who've made the most money over time, some of them have win rates as low as 25%, 30%. That sounds crazy, right? Well, those traders tend to be trend followers and tend to go after big wins. They have a ton of losers, but those losers are small. And they have the occasional big win, and it makes all the difference. Poor strategies, right? We're all guilty of this. I'm sure everyone listening is questioned whether or not their strategy makes any sense, or if they're missing something, or they just haven't adjusted to the markets. I am very guilty of that. I am a strategy junkie. I have a graveyard of Google spreadsheets of different strategies I've tinkered with and back tested and tracked and paper traded and traded live and kept all the stats, and one after another, they've all lost for various reasons. Some that either had to do with the strategy themselves or maybe had to do with me. And we'll talk about that a little bit as we go forward. Undercapitalized, right? We've all been there, I think, especially when you're new. It's when we're small, we don't have the capital to, maybe size our positions properly. We're taking on more risk than we should, or maybe we're stressed. We're undercapitalized for a reason. Why? Because that's all the money we have. Okay, that's very dangerous. Again, not telling you anything you haven't heard, but if you're out there trading with money that is earmarked for paying your rent, putting food on the table, getting out of debt, whatever, that's a head game that most traders lose at. So being undercapitalized is a big reason traders fail, and that leads to taking position sizing and poor loss or poor strategies and big losses and small wins. It all kind of feeds into that, right? Wrong expectations. This is a big one, a huge one. I'll tell you about the wrong expectations I experienced when I started in 1998 as the internet.com bubble was really taking full bloom and getting crazy. Well, I was new to the game then. I didn't know any different. I thought this was normal. And everybody in my office that I was trading with, the 40 other traders that were in that office, we all thought this was normal. And once we all went through the trial by fire and made the mistakes we all needed to do, some of us had quicker learning paths than others, but eventually everyone in my office, we figured it out, and we were all making big, big money, especially for guys in their early 20s. I mean, there were guys in my office making $50, $60, $100, $200,000 a month. It was insane when I look back upon it. And that environment created a set of expectations that we all had, that this type of money and this type of market will be with us for the rest of our careers. And that really set everyone, myself included, maybe myself the most, really set me off in a bad path. I set a framework around, this is what I expect to make, and this is what I'm worth. I attached my self-worth to that. That's very dangerous. And when the market turned, when the market bottomed out in 2002, going into 2003, all of a sudden, the stock market really just reverted back to the normal stock market. But to us, we were like, what's changed? The world has changed. Our strategies don't work anymore. The things we were doing are not making the money. All we're doing is grinding away our capital, grinding away our accounts. Because we had the wrong expectation that the market we had been trading for the previous 3 years, that was normal. And that absolutely was not normal. And it's taken me 17 years, like I said, to unlearn all those lessons that I taught myself and ingrained myself during those early times. And then finally, we'll end with undisciplined. You can't see me. I'm raising my hand here, though, but I'm absolutely guilty of being undisciplined. Even to this day, I'm guilty of it. I have strategies in place I like to employ, but man, for whatever reason, sometimes I just get lazy. Sometimes I'm hurried. Sometimes I'm distracted. Sometimes I just don't feel well. Sometimes I'm angry. It doesn't matter what the reason is, but so many things kind of come at you to make you undisciplined. And being undisciplined is the undoing of many, many a trader. Now, again, I've listed 7 reasons here why traders fail. I've probably missed 1 or 2, and that's okay. But here's the thing, and this is something I like to talk about when I do presentations live and when I meet with people and meet with other traders. I run a meetup group here in Colorado. We meet a couple times a month, and I meet new traders all the time. And one thing I like to talk about is the paradox of trading success. And the paradox is this. You could put 1,000 successful traders in a room, a large room, right? You put 1,000 successful traders in a room, and I promise you, all 1,000 of those traders make money and are successful in different ways. Now, there may be commonalities to certain strategies. There might be a bunch of people that are trend followers. There might be a bunch of people that are options premium sellers. There might be a bunch of people that are doing arbitrage strategies. There might be a bunch of high frequency traders. So there'll be commonalities amongst people, but I guarantee you each successful trader will have their own flavor for whatever they do that makes them money, right? So if you think about that, there's an infinite amount of ways traders can make money. On the flip side, I'm showing you 7 reasons right here why traders lose. I'd be willing to argue with anybody that every reason that traders lose is some variation of these 7 items you see here on the screen. There's really only a handful of reasons why traders fail. So when you think about it, you have an unlimited way of making money, unlimited amounts of ways to make money, yet only a handful of ways to lose money. You would think, well, this should be easy. I should make money, right? That's the paradox of trading success. Why is it so goddamn hard to make money when there's only a handful of ways to lose, but there's a million ways to make money? This should be easy. It is not. That's what I call the paradox of trading success. So I'm going to offer a mea culpa here to all of you. I've listed 7 reasons why traders fail, but I'm going to list the one reason, what I feel is the biggest reason why I have struggled to have consistently profitable trading throughout my career. I've had many successful stretches, very successful stretches, where I've made really large sums of money and great returns on capital. But throughout, a common theme throughout my 21-year trading career is I haven't been able to consistently be profitable, stay consistent and stay in that winning zone, month after month, quarter after quarter, year after year. And the biggest reason for me, this has taken a lot of soul searching, the biggest reason for me is strategy drift. Strategy drift has been my greatest undoing. And I'm telling you this because what we're going to get into is we're going to talk about how trade ideas can take strategy drift, a problem that affects many of us, myself, again, holding my hand. You can't see me, but I'm holding my hand high right now. Strategy drift has been my number one enemy, and that is a killer for traders. So let's get into why strategy drift happens, and we'll kind of go through the steps of how successful traders build strategies, okay? So again, I'm going to go through a little bullet point list here, so bear with me, but this is all very important. So when you're coming up with a trading strategy, or when I'm coming up with a trading strategy, it starts with a conception of an idea, right? I come up with an idea. Ooh, I want to buy stocks breaking out to 20-day highs for swing trades. That's an idea, right? I mean, we've all heard buy high and sell higher, right? That's like the mantra of trend followers. Buy high and sell higher, or sell low and buy lower, right? So that's an idea. Well, great. That's a kernel of a thought. What's next? Now you need to start modeling that idea. What does that mean? You need to come up with, what are your signals? What are your what's the triggers that get you into a trade? How do you manage that trade once it's in? Why do you get into the trade in the first place? What types of stocks do you want to trade? You can't trade every stock, or maybe you don't want to trade every stock. I'll tell you personally, I don't like to trade penny stocks. So I tend to avoid any stock under $10 a share. I'm not making a value judgment on penny stocks. It's just not my purview. I don't feel like I have an edge in that game. I feel like it's too volatile for what I like to do. So I want to trade stocks above $10. I want them to have a minimum average volume, right? I want there to be a minimum market cap, things like that. So modeling the idea and the triggers and the filters that are important for your strategy. Next comes idea testing. Very important step, often skipped over by beginning traders. I skipped over this process repeatedly early on in my trading career, and to some extent I still do sometimes. Idea testing means you come up with your strategy, you come up with your idea, you model the idea and what that looks like, and then you start back testing it, right? Okay, how would this strategy have performed in the past? And there's lots of different ways to back test. I can tell you, I'm not a computer nerd. The idea of coding makes my head spin. I can't even talk about it. Like, I don't even understand it, and my brain doesn't work in that way. So when I did back testing back in the day, I used to do it by hand, literally by hand. I would have spreadsheets and I'd write down the trade triggers and the time and the date, and I would go tick by tick, going back and back as far as I can, as far as my data would allow, or until I just mentally couldn't take it anymore. I would go back and back test these trades and see how they would have performed. And that's a very time-consuming process. Once I've gone through that step, next would be optimization. Once I've got the data, saying, okay, well, here's my strategy, here's my idea for a strategy, here's how it would have performed over the last 6 months, 3 months, whatever, 12 months. Here are the raw results. Here's the data. The data doesn't lie, right? Well, assuming the data is revealing to you, it'll reveal the warts of the strategy. You'll see where it needs to be improved upon. This is the process we call optimization. Optimization can take many forms, but a basic example of optimization could be you run this strategy, you trade all these stocks, and you find when you look at the numbers and look at the data that, wow, all stocks that have a market cap below 50 million or 500 million, let's say, my win rate or my performance, the return from that segment of stocks is terrible, right? Just red across the board. Okay, great. Let's filter out those stocks and let's trade only stocks above half a billion in market cap. I'm just making numbers up here, but you get the point. You go through that iteration and find all find the commonalities amongst the trades that didn't work and try to weed those out to make your strategy better. That's called optimization. Once you've done that, then the next step for me is forward testing. Forward testing is commonly is a common phrase for paper trading, right? We've all heard of paper trading, where you're watching the market in real time. You're putting on pretended trades. You either use a simulator with your broker or some service available online, or you just kind of keep your own result or keep your own data, right? You have a spreadsheet. You observe the market and say, okay, that's an entry. Boom, you write it down and you track it. Whatever your means of forward testing are, doesn't matter, but you go through that process. If you're doing it right, that's the next step. And then once you've done that and the results are satisfactory, then you put real money to work. Ideally, you're putting small amounts of money to work, because regardless of what the back tests say, and regardless of what your paper trading or forward testing says, the fact of the matter is, when you get into the real world and start putting real capital to work and you start trying to execute trades in a real marketplace where your trades affect the marketplace, that's going to change the results. In 99% of the time, it negatively affects results. That's okay, but we have to account for that, and we have to put money to work to see how our impact of the market, how that affects the equity curve of the trades, right? There's slippage involved, there's commissions involved. All these things can't really be measured, well, maybe commissions, but the slippage cannot be fully factored in an optimization or paper trading. You have to put money in work and see what the impact of slippage is. Once you've done that, in a perfect world, you find out it works, that's great. You put more money, you scale into it, and you just keep going, and we all sail off into the sunset making a shit ton of money, right? Well, the reality is, once you've put money to work, oftentimes, many times, and certainly in my case, things go along, they go along well, maybe for a week, maybe for a month, maybe even for a year. I've had all those experiences. But eventually something happens. The market changes, and an external event takes place, or you just, you start noticing that, oh man, there's something really wrong with this strategy. I'm starting to lose money. It's not working anymore. I took a loss way bigger than I should, way bigger than my back test suggested that I would. Whatever the case, you start circling back. And now there's nothing wrong with circling back, okay? If it's not working, why keep doing it, right? You gotta go back to the drawing board and start figuring out new ways. The problem with that is that all 7 of these steps I'm listing here, all of this takes time, a lot of time. And I don't know about you, but for me, starting at idea conception, getting to putting all the way through to putting money to work, that could take as little as 1 week to as long as 4 or 5 months. I mean, I've thought about and built upon and worked on strategies for 4 or 5 months before I was ready to put money to work. That is a time-consuming process, and that is where the trouble lies. It's not the circling back and coming up with a new strategy. Coming up with new strategies is great. You should always be trying to think of new ideas and try to improve upon what you have. That's fine, but these things can take time. And for me, speaking of Sean McLaughlin here, Chicago Sean, when I would get to that circling back stage, here's the problem. I'm circling back because I lost money, and I'm losing money. And oh man, I need money. I need to pay my rent. I need to buy food. I need to, you know, buy a car, whatever, it doesn't matter, but I need money. And when I'm circling back, what does that mean? And I'm back to the beginning and coming up with a new strategy. What does that mean? That means I'm not trading. And what does that also mean? It means I'm not making money. Then what, right? For me, this has been my biggest struggle because I'm building strategies and finding eventually that they don't work or that they need more work, and so I'm going back and I'm just, you know, feels like in a lot of ways, maybe as an outsider looking in at me, they're like, wow, he's just spinning his wheels, right? He's not really making any progress, just going back and forth and trying to build strategies that don't work or don't work the way they should work. All of this takes time. This takes time and costs money, whether it costs real money or opportunity costs. Either way, that is money, and time is money, and we're here to make money, right? Let's not confuse our mission here as traders. Our goal is to make money, right? There's nothing wrong with that. Making money is why we're here. Making money serves everything else in our life that we want to be, who we want to become, where we want to live, the kind of people we want to be, right? Money serves all of that. So here's where I talk to you about trade ideas and where trade ideas helps solve my greatest problem. Again, what's my greatest problem? Strategy drift. Trade ideas takes strategy drift and instead of making it a liability, turns it into an asset. Okay. Now, I'm not going to, in this presentation, I'm not going to go into a product demo. I'm not going to go into the X's and O's of how this thing works and show you all the features. I just, you know, I don't have enough time to do that. And frankly, you'll be bored by it, right? It's just, you know, that's where I lose you and you're going to lose interest. What matters here is we talk about the concepts and what we are attempting to do. Trade Ideas has built an artificial intelligence engine that we call Holly. And I don't know why I don't have Holly on this slide. bad on me, but we call our AI engine Holly. IBM has their Watson. We have Holly. Okay. Now, what Holly is doing is Holly has a core set of base strategies. At last count, I believe we're up to around 60 strategies that the AI engine runs. Now, these strategies are all built in-house by the traders here at Trade Ideas. Trade Ideas is a small company. We've been around since 2003, but we have just under 25 employees. So we're a small company in that regard. But every one of us either is currently a trader or was a trader or comes from a background of building trading systems for hedge funds or other private investors. So everyone has a market background at Trade Ideas. So I like to say we know what we're doing. We can argue about that if you'd like, but we all have skin in the game, okay? Maybe that makes more sense to say it that way. We all have skin in the game and we know what we're doing. And so we have 60 or so base strategies that on a nightly basis, all 60 of these strategies are getting re-optimized by the engine. Okay, so these 60 strategies, I'm ballparking here, but it's probably a 60-40 split between long-based strategies and short-based strategies. So probably 60% of our strategies lean towards the long side, 40% lean towards the short side. These are all intraday trading strategies, I should point out. And these strategies, what will happen is every night when the market is closed, our engine on our server farm will run back tests on all 60 strategies. And once those back tests are complete, the engine will go in and dig through the data and try to figure out where each strategy is underperforming. You know, where's the warts of this strategy? Where is the part where this strategy gets tangled up? Okay. And it will then go through and try to optimize each strategy. It'll say, all right, strategy XYZ, all these strategies have names. Excuse me, I got a little frog in my throat. All of these strategies have names, and it'll say, okay, strategy XYZ seems to be performing very poorly in any stock trading under $20 a share. Okay, great. Let's filter out stocks under $20 a share for that strategy. And now that strategy will only trade stocks priced $20 a share or above. And it will go through approximately 50 data points, 50 filter sets to see if there's any way that we can improve upon the strategy. Now, here's the important point. If you or I, let's just say me, if I were to go through and run a back test on one strategy and then go through the process of figuring out where it's not working and then optimizing it, that process alone on one strategy, if I'm lucky, it might take me a couple hours. If I'm sort of lucky, it might take me all night. If I'm unlucky, it could take me several days. Now multiply that times 60 different strategies. We're talking about a process that would take a human probably 3 weeks to perform. Well, our engine does this every night for all 60 strategies. So all 60 strategies get re-optimized to work best in the current market environment. And then the next step is the AI will determine what type of market environment we are in. Are we in a uptrending market? Are we in a downtrending market? Is it volatile? Is there high volume or low volume? Things like that. It takes all these different parameters into the soup and it determines what type of market it is, and then it determines which of the 60 strategies have the best statistical chance to outperform on the next trading day. And so what will happen is it'll pick 5, 6, sometimes as many as 10 strategies from amongst the 60 or so strategies. It'll take, a handful of them that have the best statistical chance to perform in the current market environment. And then so us as traders, as customers of Holly and of Trade Ideas, when we log into the platform every morning before the market opens, we get to see the 6 or 7 or 5 or whatever number of strategies that are going to be active that day. We see what the win rate is and the expectations for that strategy. And then when the market opens, those 6 strategies are running, or 5 strategies, whatever, they are running and they are serving up trades as they happen in real time according to that strategy. And it is upon us to decide to make those trades, to take those trades. We could do it manually. Many of our customers do. Or we also have the ability for traders to auto trade the Holly. We can connect it to your brokerage account and turn it on, and the Holly AI engine will trade for you. Now, that's a very important concept, and it's very sexy to a lot of people, this auto trading, the AI that has a statistical edge of outperformance. It's a very sexy concept, but any one of you listening right now who's getting excited about that, let me just pump your brakes a little bit. I strongly encourage you to manually trade the AI first before you ever consider auto trading, because you have to get a feel for how that works before you can consider kind of giving up the reins, so to speak. Okay, wow, I don't know why my thing keeps flipping, so sorry about that. So Trade Ideas saves you so much time by putting an edge in your pocket, right? All of these strategies have trades or have statistical edges. Are they going to make money every day? Absolutely not. Is every trade going to make money? Absolutely not. Okay, let me make that clear. This is not a crystal ball system that's going to do nothing but make you money. It's not an ATM, right? It's not going to print money for you every day. You don't just turn it on and pull money out, all right? But over time, over a long period of trades, of hundreds and thousands of trades, the statistical edges pile up. And anyone knows that if you have a statistical edge, the more often you get to exercise against that edge, the more often you get to take trades with that edge, you get closer and closer to realizing that edge. Okay, so after hundreds of trades, after thousands of trades, you'll start getting that edge, and you'll notice it's profitable. The profits are there. I should have put up a graph here, but I didn't know what the rules are in that. But we do have performance that we can chart, that we've shown, and see how Holly has performed compared to the S&P. And if anybody wants that, feel free to email me. My email address is sean@trade-ideas.com. I'll show that again in a little bit. But I'm happy to share that with you. But the AI engine for Trade Ideas is a powerful tool to take a problem, at least my problem, of strategy drift, of bouncing from strategy to strategy without really knowing if they're going to work. This engine does all the hard work for you. It comes up with the ideas. It tweaks the ideas, it tests the ideas, it has the data to improve upon the ideas. Your job as a trader is simply to execute. If you can execute, then Holly and Trade Ideas could be a fantastic tool to augment your trading. Can you execute? Well, if you can, or if you'd like to try, I would encourage you to go to this web address we have here, trade-ideas.com/Sean. That's me. You'll learn a little bit more about me there. You'll also find a discount code to try out Trade Ideas to get a discount off your first month. I strongly encourage you to check it out. We actually, and I should have built a slide here, shame on me for not doing that, but we actually have a test drive coming up in just a couple weeks where anyone can use every feature of the platform of Trade Ideas for just $8.99. You get a full week of trading, so 5 full trading days. You'll have full access to the platform for $8.99. Not only will you have full access to the platform, but you'll be invited to daily training sessions, daily Q&As, where our training staff will be live on the call, sharing our screens, walking you through the platform, answering any questions you have, and showing you how to do it. It's really, for $8.99 for 1 full week of that, that is a tremendous, tremendous value. And if you go to this web address you see here, trade-ideas.com/Sean, you'll see a pop-up that'll come up telling you about the test drive. So I would encourage you to try it out. $8.99, folks, for a full week of testing. If you can't afford to risk $8.99 on a trade, well, maybe we shouldn't be talking. But I think I would encourage you. I think you'll get a lot out of that. So with that, I've come to the conclusion of my prepared talks. We've got about 5 minutes left here. I don't know if any questions came in. Let me pull up the questions panel, see if anything came in. Why does that keep doing that? I don't know. I don't see any. Oh, wait, I do see questions. Give me a second, folks. What size account would be required for auto trading, Holly? Great question. That's actually the only question I see there. Well, here's the thing with auto trading, Holly. Holly, as currently constructed, is a intraday trading tool. Okay, all trades are closed out by the end of the day. The system is in cash, theoretically speaking, at the end of every day. So that means if you are based in the US, which I imagine most of our listeners here are, if you have less than $25,000 in your trading account, you are subject to the pattern day trading rules. Now, we can debate about whether or not pattern day trading rules are a useful rule. I tend to hate it, and I can talk to you at length about that. I think it's kind of a garbage rule that doesn't protect anybody. Well, it protects brokers. It doesn't protect us. It doesn't protect you and me. But anyway, if you intend to day trade, which is what Holly does, you will need to have a minimum of $25,000 in your trading account. That's not a Trade Ideas rule. That's a U.S. government SEC NASD rule, okay? Now, Holly can be a tremendous resource for swing traders. And if you want to email me at this email address you see on the screen, or hit me on Twitter at Chicago Sean, I'm happy to share a blog post with you that I have written for that purpose. It talks about how I use Holly to kind of be the scout for great swing trades. So it can be useful for swing traders, and therefore, so if you have maybe a smaller account, if you're under 25K, you don't want to day trade, Holly can be a great tool to help you identify fantastic swing trade candidates. So I'm going to put my my offer code back up here, or my offer link. Please give it a try. Visit trade-ideas.com/Sean. If you want to go ahead and sign up for a full subscription now, that's wonderful. There's a discount code that you can use, or the easier, less painful route. Not that anything's painful, but the easier route is just sign up for our test drive. The test drive starts Monday, August 12th, so 2 weeks from yesterday. All right, and you'll have a full week to kick the tires of the platform. You'll have full access to every feature on the platform, and more importantly, you will be invited to daily training sessions where you can ask any question you want, and we will answer those questions live on the call, showing you our screens and walking you through visually tackle everything you got. So with that, I think I'm coming to my end. It's been an honor to speak to you, and I appreciate the guys here for putting together this platform for me to engage with the audience. Traders Talk Live. Thank you so much. I am Chicago Sean, and I am out.